In today's energy markets, I want to focus on natural gas. Natural gas, a decent mover today, up better than 2% on the day. The biggest mover in the energy complex today when you compare it to, say, crude, WTI, or Brent. So we're seeing natural gas bouncing back after that big gap lower last Monday. We are seeing it recover somewhat here and now filling that gap. And we saw a low last Monday of 2.158, and we're currently around the 2.351 levels. So again, coming off of those lows and again filling that gap that the market experienced, and I think that's an important thing from a technical standpoint here. When you look at some of the driving factors today, I think you want to point out that certainly the trade negotiations, I think, was the catalyst for most of the upward momentum today as we continue to see the equity markets making new highs. We saw the commodity space very strong across the board in all the different types of asset classes. And so with that, we also saw rates, bonds under pressure, rates moving higher today as well. So all those things, I think, factored into giving natural gas a nice tailwind today. Also, we had some other news breaking that's kind of new to the market and something that's going to have to be considered moving forward. And now we have a new producer in the market, and Israel launched its Leviathan field here over the last couple of days. And certainly it looks like it's going to start to roll out now production of natural gas in the Mediterranean Sea. And by early next year, they're going to become an exporter to, they've built some trade relations here, I believe, with Jordan as well as Egypt. So there's a new player in the space, and there's expectation that production is going to come online pretty quickly. So that's another thing that the market's contending with, I think, as you continue to see, again, the production of natural gas shifting from a more global standpoint. And also, certainly, you see exportation of natural gas from the United States continuing to evolve as well. I think the driving factor here today to help push prices higher, even though the weather was pretty moderate over the weekend and the expectations for the forecast are going to remain fairly moderate for the next 2 weeks. So you would expect that to have some downward pressure. But I think now we're starting to see the trends in the market shift towards higher expectations of demand in 2020. And I believe as the EIA indicated that they see demand picking up into 2020. Also seeing natural gas now continuing to build on its trajectory relative to coal. We continue to see natural gas taking on more and more market shares. Coal is giving up more market share. So I think all those factors now as we move into 2020 are continuing to be priced into the market as we see natural gas coming off the lows from last Monday, closing that gap and continuing the short uptrend to start the week.